Hi there, my name is Tony Law from Your First Four Houses, and I'm delighted to be joined today by a good friend of mine. He also just happens to be the founder and the CEO of Closed Bridging Finance. Rory, thank you for coming along and spending a bit of time with us today.
Well, thanks, Tony. Pleased to be here. We can share some tips and ideas with your viewers. Look forward to it.
Brilliant. So what I want to do today is I just want to give a kind of autumn summary, really, of where we actually are. There's been some really big changes that have been happening in the property market over the last few months. And so I want to kick things off straight away. We're just jumping into the judicial review. Now, I know that most people watching this are probably fully aware of what that is, but let's just give a brief summary on what it is and what's happened very recently, please.
Okay, so keep it nice and simple. You may or may not be familiar with George Osborne. Thought it was a great idea when he was Chancellor to say we're going to tax landlords. You won't be able to claim if you have mortgages. The mortgage interest rate relief at the higher rate, say 45%, only at the 20% rate. And he says, so what? Well, if you have mortgages and you are making that claim where you own properties in your own name, not limited companies, over the 4-year period that this will be introduced, Tony, it's very highly likely you will pay more tax. That's the bottom line. You'll pay more tax. The judicial review element, there were 2 landlords. They created a campaign called the Tenant Tax Campaign with a view to challenging the government to drop this legislation. It was the decision came out just over a week ago. Sherry Blair was the QC acting on behalf of the landlords, and the judge said no, nothing will change. Their option now is to basically lobby the government with a view to explaining the consequences. And in Ireland, they did this in 2009, and bizarrely this week actually they've started to reverse that decision because rents rose significantly.
So there is still a chance that something can actually happen here in a positive way for us?
There's always a chance, but I'm a realist, and I would say if it doesn't change, then you need to plan accordingly.
Okay.
And what would I do? I would find a really good property tax accountant who could analyse my property portfolio and look at my personal situation, so to determine for each individual property what the tax that I would pay over the next 4 years, because this tax will be phased in over the 4-year period. So let's assume at the end of the 4-year period and you own, say, 3 or 4 properties, your tax bill will rise by, say, £3,000 to £5,000. Well, you can sort of see that today, and then you can plan for it and come up with some corrective action. Now, there may be some landlords, and certainly a landlord I do some work with, they have 100 properties in their name, and they've taken some appropriate advice, and they're going through the process of incorporating their business so it becomes a limited company. And again, you need to get advice to do that, and they paid handsomely to be able to set that up, which means get the advice, do the analysis, get the advice, then implement the plan.
Absolutely, and obviously it's a time for refocusing down on what your strategies are. And we were talking before we started filming about the importance of maybe just getting back to basics, looking at the strategies that you're using. Maybe you need to change direction slightly. Is there any sort of thoughts that you've got in this department?
I have. Fortunately, I had some holiday in August. I'd never been on a cruise. I'm lying on this cruise ship, looking at the sunshine, having a fantastic time. And then I started to think about property, and I just thought, if you go back to basics, if I started again, what would I be thinking about? And that would be, number 1, what are my standards? 2, what are my goals? 3, what are my strategies? So let's just pick up on a couple of those. Standards, the standards, that's what defines you. So if you said, I'm going to go and see a personal trainer Monday, Wednesday, Friday at 3 o'clock, and you stick to that, that's not a goal, that is a standard. So you live by it, and everything else will revolve around it. Goals you can set, and it's great to have big goals, but sometimes you don't achieve the goals, whereas the standard, that's a given. Strategy, so let's bring it back specifically to property. If you're very clear that you're here and you'd like to get to here over a given period of time, then we need to work out what are the 1, 2 or 3 key strategies that you can follow that will enable you to achieve your dream. And that might be as simple as, I'd like to replace, say you had a monthly income of £3,000 a month, so what specifically do I have to do to get to that number over what time period?
Can we just touch briefly upon home ownership as well? Because I know that there's been some changes there that we wanted to talk briefly about, isn't there?
Yes. So again, you know, Tony, that I like to do the research when I do sort of mortgage and finance updates. And home ownership in this country definitely has changed. So currently, we're running at about 64% home ownership. This peaked at about 71% in 2003. And you go, so why has it dropped? Two key reasons, really. Number one, you need significantly more deposit to be able to buy a property. Or, by the way, house prices have also risen significantly as well.
And this is not evenly spaced across the whole of the country. It does actually vary from region to region, doesn't it?
It does. So if you reverse the home ownership piece, well, actually, if you're not a homeowner, then you're a tenant and you're renting. Now, we're speaking to property investors and landlords today. These are your customers. So I certainly would want to do the market research to understand where is there over or under supply of appropriate accommodation to meet the needs. Now, when you drill into this, you'll find that overall in that time period from 2003 to 2015, in the UK, the number of renters rose from approximately 11% to 19%. But in Manchester, it went from 6% to 20%.
That's a massive difference.
That's phenomenal.
Yeah.
Now, I would want to understand which parts of Manchester,
Yeah.
is that a good or a bad place to invest? And that comes back to your strategy and back to some of the key metrics or numbers that you're using to determine whether this asset class is a good one to invest in, i.e. property.
And I gather, again, talking earlier on, 2 out of 5 renters actually never see themselves buying a property, do they?
They don't. Generation rent, of which we're talking about 8.5 million people, yes, they 2 out of 5 never see themselves actually owning a property. They accept that you pay rent, and that means it's a great opportunity for landlords, because if you have the right property and you've refurbished it, you provide really good quality accommodation,
Yeah.
your tenants will stay.
And you've got to provide good quality accommodation, because there's also a lot of competition out there. There are a lot of landlords out there who are upping their game. They're putting better quality accommodation out there on the market.
Absolutely.
So let's just talk briefly about one other thing, which is the fact that you've noticed a bit of a change in terms of repossessions, haven't you? There's been a bit of a spike recently in terms of repossessions. Can we talk briefly about that?
We can. So again, as part of my weekly research, what's going on in the world of property, particularly when it comes to mortgages and finance, I just understand what's going on. So the FCA, the Financial Conduct Authority, which is the regulatory body, they published some data which included up till the end of Q2 2016, so up till June, repossessions in this country had been declining significantly, and actually that has just changed. So that's either a new trend or it could be a blip. But to define that increase, there are about 218,000 mortgages that have appeared on the radar where at least 1.5% of the outstanding loan balance is in arrears.
Right.
And that can be split between normal residential houses that we would live in as a homeowner, or properties that landlords own.
Right.
And the figure that intrigued me, if I'm a homeowner, roughly there are 36 repossessions per day. And if I'm a landlord, it's about 309 per day.
That's a massive number.
It's a big number, and that increase has kicked in that last quarter. So we don't have enough data to see it change.
No.
But I'd strongly urge you, if you're an investor, you do your research.
Yeah.
So you go to the websites like CML, the Council of Mortgage Lenders, look at the data. They employ very bright, intelligent people to gather the data. And do your market research.
Absolutely. And this is really an opportunity for us, dare I say. I mean, we need to I would suggest that we need to get out there. We need to sort of connect and contact these people who are maybe in these sort of difficult situations and find solutions that we can put to them that would genuinely help them and solve the problem that they've got. I mean, there's some really wonderful opportunities out there at the moment where we can kind of supply a solution for these people, isn't there?
There can be. So just take that example of repossessions. If we go back to the crash of 07, 08, there was a significant number of repossessions at that time. And what we don't want to see, and the government don't want to see, are families on the street. And the same with landlords, because their tenants will end up on the street. So there are a myriad of strategies that you could follow if you get some good training and you have some good people advise you, where actually you can turn this into a win-win situation.
Brilliant. Listen, I hope that's been a real help to you. We're going to make this a sort of fairly regular thing, aren't we? We're going to do another one winter time, which I'm looking forward to. But I genuinely hope that you found that of help. What I've gone and done is I've actually prepared a brief ebook for you. And in there, you're going to find every single website, tool and app that I use. And I genuinely think that you're going to benefit from that. I'll put a link in the box below. But I'd also encourage you to sort of touch base, maybe connect with Rory. He's a very clever guy. He's helped me out enormously on a number of different projects. And so again, I'll put Rory's details in the box below. I really hope that you found that helpful. And yeah, we'll look forward to seeing you in a few months' time. Thanks so much indeed, Rory, for coming along. And we'll see you again soon.
Thank you, Tony.
Thank you.